Chapter 4 walks us through the final steps required to complete the accounting cycle. This lesson focuses on learning objectives 1 and 4, which will provide you with an overview of the accounting cycle, the end-of-period spreadsheet, and also provide you with a better understanding of how financial information from transactions flows from the unadjusted trial balance to the adjusted trial balance and ultimately to the financial statements. There are actually 10 steps in the accounting cycle, and we've already covered 6 of them in previous chapters. Let's review. Chapter 2 covers steps 1, 2, and 3 of the accounting cycle. It introduced us to the process of analyzing transactions and then demonstrating how to record those transactions in the journal. The next step is to post the transactions or journal entries to the ledgers for each account. Once the journal entries are posted, the third step in the accounting cycle is to prepare the unadjusted trial balance. Chapter 3 covers steps 4, 6, and 7 of the accounting cycle. In Chapter 3, we learned how to prepare and analyze the unadjusted trial balance, and then use this information to prepare the adjusting journal entries. Once the adjusting journal entries are journalized, they must be posted to the ledger for each account affected by the entry. After the adjusting entries are posted, an adjusted trial balance report is prepared. At the conclusion of Chapter 4, we will have a solid understanding of the final 3 steps in the accounting cycle, which are Step 8, generating the financial statements, Step 9, preparing the annual closing entries, and Step 10, preparing the post-closing trial balance. Chapter 4 also provides an in-depth explanation of the end-of-period spreadsheet, which is actually Step 5 of the accounting cycle. Although optional, the end-of-period spreadsheet is a useful tool used by most accountants to complete the accounting cycle. The accounting worksheet, also called the end-of-period worksheet, illustrates the impact that each adjustment has on the financial statement of the company. Let's review the end-of-period spreadsheet for Kelly Consulting. Just like all of the other financial statements, there is a 3-line header at the top of the report, and it follows the same format as the other statements. The first column in the worksheet lists each account title or account name. The second and third columns, B and C, are the debit and credit columns for the unadjusted trial balance totals. The ending balance of each account listed in column A must be entered in the debit or credit columns of the unadjusted trial balance using the ending balance found in the general ledger. For example, the account name cash is entered in the account title column on row 8. The ending balance amount for the cash account, which is a debit of $22,100, is entered in column B, row 8. Once the balances are entered for each account title, the sum of columns B and C must be calculated to ensure that the sum of both columns equal. If they don't equal, this indicates that an error has occurred and should be researched. If you refer to row 27 in the example, the ending balance for both column B and C is $56,750. Therefore, they equal. The next 2 columns in the worksheet are used to record the debit and credit amounts for each adjustment or adjusting entry. In the example, the adjustment columns are D and E, and they are labeled debit and credit. There is an $850 credit entry in column E, row 10, that is labeled with a B. The account title in this row is the supplies account. The debit side of the same adjusting entry is located in column D, row 23. It is also for $850 and labeled with a B. The account title for this row is the supplies expense account. Once all of the debits and credits for each adjusting entry are entered, the sum of each row must be calculated to ensure that the debits and credits equal. The next 2 columns are the adjusted trial balance columns, and they are also labeled debit and credit. The purpose of these 2 columns is to calculate the ending balance in each account row after the adjustments have been made. For example, let's refer to the supplies account. In row 10 of the example, the unadjusted balance in the supply account before the adjusting entry is $2,200. This amount is found in column B, row 8. Now we need to calculate the new adjusted balance by subtracting the credit adjustment of $850 that is found in column E, row 10, from the starting balance of $2,200. If done correctly, the adjusting balance is $1,350, and this amount is entered in column F, row 10. The adjusted balance must be calculated for each account title and entered in column F or G, depending on whether it has a debit or credit balance. If there is no adjusting entry for an account, the starting balance located in the unadjusted trial balance columns would just be carried over to the adjusted trial balance columns. Once the adjusted trial balance totals are all calculated, the sum of both columns must be calculated to ensure that the credits and debits equal. This concludes this lesson.